welcome to another insightful video from Vidyarupa Academy. We are going to discuss about the supplementary material that has been issued for June 2026 exam. I would suggest you to subscribe to our channel for continuous and regular content with respect to CMA and how to prepare for the exam, latest updates, latest notifications with respect to the exam, and rapid revision studies. So if you see the supplementary material of December 25, the same has been retained for the June exam as well. So if you've already downloaded and prepared the December material, then you are good to go. If you have not gone through the supplementary material that has been issued, it is very important that you cover the aspects in the supplementary material because that can be one question from the supplementary material. So with respect to Companies Act, the amendment in the law paper is with respect to Companies Act, migration to Ministry of Corporate Affairs V3 portal. So V3 portal is a new initiative by MCA. Earlier there was V2 portal and now MCA has come up with V3 portal. So this is something that is very important, very relevant to the recent times that you need to take a note of. So the transition is from V2 to V3 portal and it includes the form AOC1, AOC2, AOC4 and MGT7 series. The migration is emblematic of MCA's commitment to the digital transformation. So you can be asked one MCQ question on which version is being used. So which version of the MCA portal is currently applicable? So it has been transitioned from V2 to V3 portal. The second point or the second amendment that you need to note, Companies Act Second Amendment Rules 2025 dated 30th May 2025. Which has enhanced disclosures in the board's report. So board's report must now disclose quantitative data relating to sexual harassment complaints, including the number of complaints which were received and disposed of and which is pending more than 90 days. So again, these requirements are under Prevention of Sexual Harassment Act or POSH Act. This is also a recent development and can be an MCQ question. This report, that is the board report, should also include the compliance relating to the Maternity Benefit Act 1961. There is an amendment with respect to e-forms AOC1, AOC2, AOC4 and which requires abstracts of board's report. So a summary of the board's report and the auditor's report needs to form part of our financial statements and it should be submitted along with the AOC forms. The third amendment that is included in the supplementary material is again the amendment with respect to Companies Act, Management and Administration Rules 2014. Forms MGT7, MGT7A, MGT15 has been revised to include photograph of registered office, a summary of indebtedness and expanded shareholder details. So out of this, photograph of the registered office is the primary change or the most widely discussed change, and this has also happened because of the transition to V3 portal. Then there is amendment to companies audit rules. Forms ADT1, ADT2, ADT3 and ADT4 has been updated and now it prescribes electronic submission of fraud reports in ADT4, replacing the previous requirement of physical submission. So now there is no requirement to physically submit ADT4. It can be submitted in e-form also. Then we have amendments to cost records and audit, very important amendments applicable to all cost accountants. Forms CRA2 and CRA4 has been revised to include additional fields such as the firm registration number, the change of the auditor, SRN number. So certain changes have been introduced to the CRA2 form and CRA4 form. Then with respect to registration offices, Form GNL1 has been amended to incorporate details about defaults, and the stamp duty section has been removed. So this is another update with respect to registration Form GNL1. So you need to remember the forms where the changes has happened because of the transition from V2 to V3 portal, and also certain additional disclosures which are required in the board's report and in the AOC forms, annual return forms, which was not earlier applicable. These are the most important amendments or the summary of the supplementary material that has been issued with respect to law paper. Next, we will go to DT and IDT. We'll first see the IDT part and then we'll come to the DT part. So IDT also, the supplementary material of December 25, the same has been given for June 26 exam as well. And the areas which are covered in the supplementary material, the first one, clarification with respect to input tax credit that is availed by e-commerce operator where the services specified under section 9(5) of the Central Goods and Service Tax Act, that is CGST 2017, are supplied through the platform. So this is particularly to e-commerce operator. There has been certain clarifications which are issued, and that has been brought in as a part of our syllabus. Issue: whether e-commerce operator are required to pay tax under section 9(5) of CGST Act, is liable to reverse proportionate input tax credit on the inputs and input services to the extent of the supplies made through 9(5), section 9(5) of CGST Act. So what comes under section 9(5) of CGST Act? CGST Act section 9(5) is whereby e-commerce operator will have to collect the tax where the service supplier and the service receiver both are unregistered person. They are liable to collect the tax and remit the tax. So e-commerce operator is required to pay tax under section 9(5), making the supplies two counts. That is, supplies notified under section 9(5) of CGST Act for which he is liable to pay tax as if he is the supplier of the goods and services, and the supply of his own services that he provides through the e-commerce platform for which he is charging a commission. For example, Swiggy or Zomato. So they will have to pay the tax, collect and pay tax if the service provider and the service receiver both are unregistered person. At the same time, they will also have to pay tax on the platform commission, platform fees or commission. So this applies to any e-commerce operator in case of food industry, in case of Ola, Uber and other transport service providers. So this 9(5) is applicable to all the e-commerce operator. So whether these e-commerce operator who are paying tax under section 9(5), whether they are required to reverse ITC with respect to the supplies for which they are paying tax under section 9(5). So it has been clarified that e-commerce operator are not required to reverse ITC on account of restaurant services for which he pays tax under section 9(5). It is also clarified that the input tax will not be allowed to be utilized for payment of the liability under section 9(5), and whole of the liability is required to be paid in cash because it is paid on like a reverse charge mechanism, and reverse charge mechanism the tax has to be paid in cash. So any payment under section 9(5) has to be made by cash, but there is no requirement for reversal of input tax credit. So this is the first clarification that has been issued. Then the second one, clarification on the availability of input tax credit as per clause B of subsection 2 of section 16 of Central Goods and Service Tax Act in respect to goods which have been delivered by the supplier at his place of business under a works contract. So whether input tax credit, so applicability of input tax credit as per section 16 subsection 2 clause B. Okay, so what is the clarification that is issued with respect to this? So circular clarifies that the applicability of ITC under section 16 subsection 2 clause B of CGST Act, particularly in cases where goods are delivered ex works contract. The issue arose in automobile sector where the dealers used to receive the goods from the factory gate and the transport was arranged on behalf of the dealer. The field formation had raised objections arguing ITC can be claimed only upon physical receipt of goods at the dealer's premises. So in this case, the goods are not physically received at the dealer's premises. Rather, it is received at the factory gate and from there a transport is arranged on behalf of the dealer for it to reach the factory. Board clarified that goods are deemed to be received when they are delivered by the supplier to the recipient or to any other person on the direction of the recipient. So handing over of goods to the transporter at the factory gate can be regarded as the receipt of goods and you can claim ITC on the point when the goods have reached the factory gate and it has been moved to the transporter. So for example, if the goods have been received at the factory gate on 31st March and from the factory gate it needs to be transported to the location, and for that a transporter has been hired by this particular dealer. The fact it reaches only on 1st April. It reaches the dealer's premise only on 1st April. So there is a question whether ITC can be availed on 31st March, the month of March, or we need to wait till April because ITC can be availed only when the goods have been received. So here in this particular circular, it has been clarified that if it is received by the transporter for further transport to the premise, it can be regarded as deemed to have been received and the credit can be claimed on 31st March itself. Then the third circular, clarification on place of supply of online services by supplier of services to unregistered person. So when there is a supply of service to an unregistered person and that too being an online service that is being provided, what can be regarded as the place of supply? This is mainly OIDAR services. That is where the online service is being rendered, like you can have photography services or you can avail the services of an AI platform whereby the services have been availed by an unregistered person and the supplier being a registered person. So the clarification states that all taxable online services which are supplied to registered person, either self-operated or or through an e-commerce platform, the state of the recipient must be recorded in the invoice. This is a mandatory requirement and as per the recipient state, accordingly, GST, SGST or IGST will apply. So the next clarification is with respect to treatment of vouchers, how vouchers need to be treated because there are different types of vouchers and the treatment, the time of supply is also different for each type of voucher where the supply can be identified, vouchers where the supply cannot be identified, the time of issue. So then the time of supply is also different. So there has been specific clarifications issued with respect to treatment of vouchers in case of B2B transactions where the distributors purchase and then they resell the margin. It will be regarded as trading of vouchers. It is not considered as a supply, so it is outside the purview of GST. And then there is additional services that is provided because through voucher issue, such as co-branding, advertising, technical support, customer care services, certain additional services that is being provided. These additional services that are provided through the vouchers, by redemption of vouchers, the recipient can avail these services. So the additional services which are provided will be regarded as a separate taxable service. Next one is regularizing payment of GST on co-insurance premium, that is apportioned by the lead insurer and co-insurer reinsurance commission deducted from reinsurance premium. So this is completely insurance related. I will not discuss it in detail in this video. Clarifications with respect to GST on certain services. Again, it is certain services like aggregators, banks, NBFCs. So certain these specific industry specific circulars, I would request you to just go through the supplement. Again, we will not take it up in this video. We will take it up separately in another video. So introduction of temporary identification number under GST. So this is a general circular and it is quite important. So earlier there was no a formal mechanism to enable the individuals to deposit tax without registration. You need to take a registration if you need to pay any taxes or any penalty. But now you can generate, the proper officer can generate a temporary identification number to any person who is not liable for registration, but he is required to pay GST. This is mainly seen where any vehicle is intercepted on the way and where there is certain issues with respect to e-way bill or invoicing and they are required to pay a penalty and pay additional tax. At that point, the proper officer can generate a temporary identification number in that state and accordingly the taxes can be paid. Appointment of dates for enforcement of GST amendment rules. So this is also important that in case of rule 2, 24, 27 and 32, the date is 11 to 25, and with respect to rule 8, 37 and 38 clause 2, the effective date is 1/4/2025. Amendment with respect to exempted services. There are certain exempted services like transmission of and distribution where changes have been made. Again, you can go through these in your supplementary material, go through these notifications in the supplementary material. We will take it up in a separate video. All these sector specific amendments which is covered in your supplementary material. Then amendment with respect to reverse charge in case of sponsorship. It is supplier of service should be any person other than a body corporate. And with respect to renting of immovable property other than residential dwelling, the recipient should be a registered person other than the person who has opted to pay tax under composition levy. So the recipient is a registered person, but if he is registered under composition levy, this RCM clause does not apply. Okay, and the RCM clause in case of sponsorship does not apply where the supplier of service is body corporate. So supplier should be anybody other than body corporate, and then this RCM provision with respect to sponsorship will apply where the supplier is anybody other than body corporate and the recipient is a body corporate. Guidelines with respect to processing of GST applications. Again, there is simplified guidelines have been introduced with respect to GST registration. You can go through the supplement material. It is detailing clearly what are the enhancement which has been done, changes which has been brought to the registration process, and how many days does it take for the registration to be completed. So this is with respect to the supplementary material issued for paper 7B, and overall we have gone through the material on an overall level and seen the amendments. With respect to 7A, that is direct tax, again December 2025 supplementary material, the same supplementary material is been issued for June 26 also. It is carried forward. With respect to direct tax, allowance of expenditure incurred for settling regulatory defaults under specified act. The notification has been issued on 23/4/2025. Okay, government under this clause has notified that expenditure incurred for settling proceedings relating to contraventions and default under the following laws will not be allowed as a business deduction. So if we have paid any penalty under SEBI Act or Securities Contract Act, Depository Act or Competition Act, we cannot claim that as a business deduction. We cannot claim that as an expense. This is one important point, an important change to note. Extension of due date for furnishing income tax return for assessment year 25-26 has been changed to 15th September 2025, a very important amendment to be taken note of. ITR 1 Sahaj. SSEs who are having long-term capital gain under section 112A up to 1,25,000 and does not have any brought forward loss to be carried forward under the head can also file their income tax return in ITR 1 or ITR 4 provided other conditions are satisfied. So you can file ITR 1 and ITR 4 if your long-term capital gain is up to 1,25,000 and there is no carry forward of loss involved. TCS applicability with respect to luxury goods. Again, a very important amendment. Where the value of luxury goods exceeds 10 lakh rupees, then TCS has to be deducted. This luxury goods being wristwatches, art pieces, collectibles, yachts, boats, sunglasses, where the value exceeds more than 10 lakhs, then you need to deduct TCS. So the other amendment is that Aadhaar and PAN needs to be linked and it needs to be done within 31/12/2025. For every person who has been allotted a PAN who is having an income tax login, they need to link their Aadhaar and PAN within 31/12/2025. Next amendment is if there is any withdrawal from National Savings Scheme, no tax at source need to be deducted. Okay. Further, a new income tax bill, that is Income Tax Bill 2025 has been introduced and the act is also effective from 1st April 2026. So these are the main amendments with respect to the papers in CMA Inter. We have covered the supplementary material of company law and covered the supplementary material for DT and IDT. With respect to IDT, we have sector specific amendments. We will come with a separate video on detailing the sector specific amendments.